95% of Australians will look at that and, well, he can afford it. Let's have a look on how we're not impacted, so that's the main thing. So that's really short-sighted viewing, because you need to think about that started that bushfire over there. How long before that reaches us? That's how people should be thinking.
At $1.7 billion, the balance of Charles Gibbon's self-managed super fund is one of the biggest in the country. But now the unrealised gains tax proposal is set to send him a $25 million tax bill.
Poor old Charles. The first that we did some analysis, I think, I think a journo did the analysis, and we did it as well, that 10% increase, he's going to be up for a $25 million tax penalty. And the way the calculations work, it's on the ATO website, or it's on many other accountancy websites on the forecasting and how this is going to work. It's not just a case of just 10%, it's actually, there's a multiple and divided by back from the 3 million. There's a formula. So yeah, he and alike, there's only, according to the ATO records, and we have 3 clients, there's only about 14 people in Australia that have over $100 million in super. And Charles is not one of our clients, but I know who looks after his affairs. And yeah, a lot of those clients are now going to be impacted. I know of clients from our end that 10 to 15 million. 2 or 3 of those, and Charles has come out there, and I'm sure that his accountants and other parties have called upon him to come out there and be a bit of a mascot for this. It is what it is, and that's fact. How the media respond to that, and the government will look at that and think, and I can see Chalmers in there and all the parties in Canberra to think, well, it'll simmer down, it only affects a handful of people at that level, and no one else needs to be concerned, and it'll simmer down. But this is what we were talking about earlier, that the only way to get the revenue, if it's such a slither of people that get impacted, well, how much impact is that revenue going to have to the economy? Chalmers comes out repeatedly saying it's only going to be a slither, was the term, of people that are going to be. And I said, well, how much? My view was, how much revenue is that going to produce, and why shouldn't it be an evenly based tax? It's dangerous, extremely dangerous, bringing in a crystallisation, a trigger on something that has not materialised. And so, because the first thing that goes into your mind, if I haven't caused that or done nothing, all I've done is tried to work hard and achieve a greater return, why am I being penalised when I've made no mistake? And when capital gains came in, anything in 85, everyone clearly understood it. So therefore, it's the other area of trust and betrayal again. So does it? So once it moves out of super, which I think there'll be a lot of money that will come out of super, does the tax office treat trusts that way? Unrealised gains. Where does it stop? If it's inside of super, it's unrealised gains, and it moves to trusts, family trusts. Over 3 million, because that's what they're doing now. What happens to personal individuals that just have it in their own name? Does that get treated? So where does it end in super over 3 million? Does it, when you see a flow of capital coming out of super, do they then adopt and apply that to non-super assets or non-super entities? Structures. That's the concern, and it starts from there. I mean, I used to think to myself when I was employing people in the early 90s, 3% SGC and I used to look at my employees and I think, God, I'm paying them another 3% over and above their wages. So, and you're sitting at, you know, before it went to 9, then it went to 9, 10.5, 11.5, and here it is today. You know, it won't be long before we, you know, in 3 years it'll be projected at 20. So what'll happen there is that, and that's just a government initiative to remove the obligations for Social Security. But what's happening with AI is, of course, that will just be, and we've moved a lot of our administration, not number crunching, but administration, to Asia 5 years ago. And so because the wages are a third, so as the impost hits me, I have to go and, you know, it's pure physics. I have to go and find somewhere else. It was only 100 cents in a dollar. I have to go and find somewhere else where I can make this more efficient. So they haven't thought about that, of the knock-on effect of that. And yet, those high net worth people are copying that. It impacts very few. I'm always concerned about what happens, how it exacerbates. What you saw with COVID, what we see today, a lot of things that COVID caused a lot of issues that we're now dealing with now. You know, inflation being one of them. So I just get concerned about that. You know, I don't think they've rolled him out, and I know he's been persuaded to come out there and speak up about that as a good example, but it doesn't work in persuading the public, because 95% of Australians will look at that and, well, he can afford it. Let's have a look on how we're not impacted. So that's the main thing. So that's really short-sighted viewing, because you need to think about that started that bushfire over there. How long before that reaches us? That's how people should be thinking. So someone comes to me today and says, we've read the Gibbon story, Paul, we've got this wonderful idea, and we're going to raise money, and it's a new mousetrap, whatever the idea is. And I look at it and I think, and I look at probably 300 deals a year, and five will you know, they will pursue, and the others will shred. But let's say something comes and we potentially could be, Paul, I could be a Gibbons. What are your thoughts on that now, knowing what you know? So the first step when I look at the system and you're trying to project forward, and you need to think about the future, because that's where you're going to be living, and looking at 3, 5, and whether it's Liberal or Labor, Liberal won't reverse that if this becomes successful, because governments just don't do that. They may tweak it. So the advice will be, okay, this needs to be protected. If this takes off and becomes bigger than the 68 Elvis comeback, where's the best tax haven for this money? Where's the best banking policy? Where's the best place to be able to leverage that, raise the capital, but where can this be incubated, you know, in what nation? But I still want to be able to raise the money, but I don't want to be caught. I want to have access to it, not to wait till 60, and that'll be another thing too. They'll push the preservation ages out, this government, 62, 62 and a half to 65. I'm 57. I wouldn't mind even betting under this tenure that my age is 60 to release super. That'll be kicked down the road, I think, even in the next 3 years, which doesn't concern me, but it'll concern others. So getting back to the advice is that it won't be super. So if we interviewed Gibbons today and had his accountants around, and we went back in time, knowing what we know now, and he started that company today, I'm betting my left arm that it would not be superannuation going forward, knowing what we know today. It'll be offshore, in tax havens, in corporate structures, S corporation, C corporation, LLPs, limited partnerships, probably run out of areas like Singapore, the Isle of Man and New York office operation and a Sydney presence. And superannuation might play some part, but it might be corporations that actually own the equity in that business. It would not be as simple. That was a very simple, I'll put the money into super and the super will own the shares. So if we interviewed him, I'm betting that's, I know what the outcome would be. So that's what you're going to start to see. And now with the wonderful accountancy and legal professions now that are doing a myriad of articles out there, and well, let's face it, I mean, I wish I had the ability as a lawyer back, Google back when I was 18, 19, 20, was saving a lot of heartache. But the information that's around now, you'll start to see distrust. People will, you don't really hear young people talk about super, because they don't really trust the governments, corporations. That's why cryptocurrency was effectively evolved in 2009, because of distrust of the whole world. And so they don't talk about super. The ones that are 45, 50, 40 to say 50, they're caught with their money. But the average account balance is nowhere near what people think. Most of the industry account balances now are sitting at, depending on which industry fund you talk to, whether construction or whether CBUS or whether Australian Civil, but they're all fluctuating between $120,000 to $270,000 per fund. So it's not as if they've got a lot of money sitting in there, and those funds, they can't invest into digital assets or anything like that. So you'll find if we brought that forward today and he started knowing what he knows now, superannuation would not be the entity for Gibbons. Yeah, it changes. There's the evolution. And so what'll happen now when the advice, and I'm not talking about doing anything, illegal or anything sketchy or smudging numbers. I'm just saying legitimately is that that's why Apple last year paid $227,000 in income tax in Australia. That's why, legally. And so what'll happen now is, rather than spend a whole lot of money on, I say to high net worth people, find the best possible investment brains you can find. I mean, I did international tax for that reason, not to go and build a practice for international tax clients, was to work out the game of chess. And people ask me now, but I don't invoice them out. I don't invoice clients on international tax law, but I know the system. And so and if you asked him, he'd pay anything to get out of that system. The superannuation structure, well, within reason, and he might, because what may happen with that is that I've been checking his date of birth, post 60, he may decide to take that out of super, tax free. Where will that go? That's the question that should pose to him, and that's another interview. And who his consultants are asking, if you've now got a key to get out, unlike Bitcoin, you've got a key to get out of that, 1.7 billion. Knowing what you know now, what's the advice on where that money should go? And there's your answer. Voila, you have it. That company has employed hundreds of thousands of direct and indirect people, and they're penalising him. And so, and others as well. I mean, that's just the beginning. That and land tax, the story goes on.